Greetings, everybody. This is Jeff Scott. I thought I'd do a quick review. I'm actually on the road, and as you can see in the lower right-hand corner, if I was on the East Coast, it would be 1:33, but I'm not. So it's Sunday morning, and I want to get this because I'll be flying tomorrow. I titled today From New Highs to Critical Support, a last stand before a major correction. I'm concerned about the market, and we'll talk more about that. And my email is there, and this is August 4th, 2019. As always, it's for education purposes only. Anything I recommend is the spirit of education and not investment advice. I'm the doctor, not a broker. I'm independent. I paid for my tools. The trading involves risk, and you alone are solely responsible for any decisions you make. I have followed a number of folks. Some of them are listed here. When I do my training live, I talk about being your own guru. And I think it's important to read, learn, get educated by smart people, and then take what you learn from them and put it together in your own style of trading, which is what I have done. I use a lot of tools in TradeStation and Thinkorswim. We'll be using TradeStation tonight. I have a number of indicators that I find indispensable. HGSI is where I do my analytics, as well as EdgeRater, and a number of other tools. Here's the website for HGSI. I point out that there's a free 30-day trial. Under investing strategies, you'll find hundreds of movies by me and others. Broken record time. It feels like we are at that right shoulder and rolling over. I've said this multiple times, and the last couple of years of the market's almost been as the top has been bisected off, and we get these quick pullbacks, and we shoot up to new highs, pullbacks to new highs. Last week was that pullback. Well, you don't know, is this the beginning of that stage 4 meltdown, or is this just another pause on the way to new highs? At some point, I think the risk of the sell-off starts to outweigh the likelihood of new highs. So if I'm concerned about that, it's time to start looking at bear call spreads, buying puts, selling calls, shorting stock, and contra ETFs. If you look at Friday's sector review, where was their strength? Well, strength was in things like real estate, paying a big dividend, utilities, dividends, staples to some extent, but it's clearly the market has moved defensive. When we look at the major markets in Thinkorswim, upper left-hand corner is E-minis, then the NASDAQ, then the YM, so the S&P, the NASDAQ, and the Dow futures. Here is the IWM, the Russell ETF, the VIX futures, and the dollar. So what do you see? You see that across the top, each of the major index futures have pulled down to this yellow line, which is their 50-day moving averages. If this market is to begin another leg up, you'd expect a move up, and we'll come back to this later. You'll notice that the Russell futures have been at best sideways, and then each of these within the last several days have gotten John Person sell signals. The VIX spiked up, but also had a shooting star on Friday. That would be some ammo if you want to stay bullish. And the dollar seems to have come down after a run-up. On the weekly charts, you could see this week we saw new sell signals come in, and last week we saw new highs in the market. Not much else to say there. Sometimes I like to look at my Genesis charts because it lays out so clearly. We have 5 columns. We have the E-minis, the NASDAQ futures, the Russell futures, the NYSE cash, and the Dow futures. You can see on the bottom, on the monthly charts, everything looks okay. Even on the weekly charts, you see that we had sell signals come in on Friday, but we really haven't broken down. And then you get to the daily charts. Now you see big bottoming tails on each of these. So perhaps some of the big selling is done and we get a shoot back up into this pivot moving average support. But I think we have to be concerned about the market in the short and intermediate term. Underneath, both the 10-year and 30-year yields plummet on the tariff fears. Falling rates should be good for REITs. They certainly were. MLPs, I didn't see that many that look good. Utilities, yes, dividend payers and home builders. AD lines, they drove lower in white, followed by the S&P, And if you look here at the NYSE AD line in white, you can see all the major indexes, and they're listed here, sort of the key. And then this is the TLT rocketing up, bonds getting higher and higher from the setting of falling yields. If we look at stocks above the 200 on the left and above the 40, we've gone from overbought areas, and I'll show you in the next slide while we're short-term oversold, but we're not to an extreme, but we've come down quite a bit. Here is on the next slide is that T2121, which is the 12-week or 12 or 3-month new high, new low ratio. Like clockwork, when I hit this upper line, you get a pullback in the market. We did here a couple weeks back. When we get down here, we have a bounce. We're not quite there yet. We might see that happen in the next couple of days. The daily McClellan and the weekly McClellans have both started to roll over, and they've been dealing with some divergences with the summation index and the oscillator. I also point out that we are nowhere near reversal areas on those. The buckets showed that now 23% of the stocks in the S&P 1500 are below their lower Bollinger Band, and 68% of the stocks are below the midline. Oversold suggests that we might have a bounce in the next couple of days based upon the past several years. No longer a Hindi free zone, but a Hindi fire zone where we've had 2 in a row on the NYSE, a smattering on the NASDAQ. By themselves, these don't mean a whole lot except to get your neck stiff, but there's not been a major market correction in the last 50 years without the Hindis, and that this is something that has me a little concerned. If we look at the Woody Index, which is in the middle here, you can see it's all red. A series of big moves to the downside put us into sell signals on all the major moving averages. And if we look at sectors, you can see that in yellow are communications, utilities, and real estate. They're the ones that are holding up as the market rolls over. Some of the big stocks, which Ian defined as the canaries years ago, have rolled over hard. Every one of them is in a sell signal right now. And you could see breaking down below the 200 and the 50 and the chandelier stop. Canaries look bad. The index from March 30th is finally getting close to breaking down. It's pulled back to the 50. This has been a place to bounce in the past. We shall see. From a news perspective this week, jobless claims on Thursday, energy on Wednesday, and PPI on Friday. You've got one Fed speaker that I can see here, which is going to be James Bullard on Tuesday. Although some of the large tech names are done with their earnings, as you could see here, we still have quite a few companies with earnings to report this week. As I quote me in the comment that I made years ago, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So markets fall hard on Fed misspeak. I think that the Fed did exactly what we expected, but in Powell's presentation, he spooked the market, similar to what led to the sell-off last year in the fourth quarter. I hope this isn't deja vu. As I showed you, most of the major markets are down to their 50-day. Will this support hold, or do we start our summer swoon? Confusing dynamics. The Commitment to Trader report actually showed pros buying NASDAQs and E-mini futures through Tuesday, but perhaps that changed after the Fed. Risk short-term feels to be greater to the downside, although I expect a bounce in the next couple of trading days. This bounce, however, may be just an opportunity to short from higher levels. And I'm planning on continuing to be careful with my NASDAQ. I've got puts on my Amazon. They're at 2,000. Amazon's now in the 1,800s. Last year, I got burned by taking my puts off too soon. These are not going to expire until the 31st or so of August. I pay for them by running calls against several of my positions, including Amazon. I've started buying contra ETFs as insurance. I'll watch for the bounce and try to capitalize it, perhaps play it both ways. So we'll go through my usual top down. It's just going to be shorter than normal tonight because of the late hour. So let's go look very quickly into TradeStation. And if we look at the E-minis, you can see Sell signal and red bars on the daily, weekly. The monthly hasn't rolled over yet. You can see that my weekly bongo here in the middle has gone red. And I want to just point out the high jump bar, which once again did not let us down, because as you could see, it was 97 last week. And I made a comment that when it gets this high, it usually leads to a market rolling over. And lo and behold, it's rolled over, and we're got much less pressure from extension there. If I look at the Dow futures, 73 on the high jump, and notice all of these are still within the envelope, so none of them are at obvious reversal signs. When we start to get below the envelope is when we get those nice snapbacks. The NASDAQ futures pull down to the lower part of the envelope, again, sell signals throughout the daily and the weekly. And then the Russell futures have been the weakest, and they sold off hard as well. Be interesting to see if these long bottoming tails hold up, and do we see a bounce? I'm just not convinced that the next bounce is going to take us to new highs, but rather might be a nice opportunity to short the market. Again, the dollar got way above the envelope here, had a reversal on Thursday and was down on Friday. This shows some MACD divergence that's getting extended. Dollar is still strong. Its high jump is down to 56, and certainly not a signal there. And then gold popped on Friday, and we'll talk more about gold and silver in a few minutes. If I go into HGSI, let me close this. I don't need this on anymore. The way I usually look at the markets, I go into my market analysis, major markets plus, and there's about 25 items there. I'm going to do this. Everything was set up on a different resolution, so it always takes me a few seconds to get everything correct. Let's look at the top-down view. We can see the strength was in treasuries, TLT, and TBF, in TLT rather, utilities, gold, dollar, commodities, gas. You know your stock holdings are in trouble when those are the leaders, and you can see most of the major indexes are down on the bottom. Now, we were just talking about the S&P 500 in TradeStation, so I don't have to spend a long time looking at it here, but let me just get my stuff set up. Let's take a look at a couple of these charts. Okay. So the first thing is when I look at the S&P 500, we've broken down, we're inside that box. This did not hold as support. We broke through the chandelier. We pulled back to the 50-day moving average, have a bit of a bottoming tail. New sell signals everywhere. These are kahunas to the downside, pocket pivots. The bongos are negative, and you can see up here we've had a couple of Hindenburg-Omen signals. I'm hoping for a bounce here. If we fail the bounce, I think we go back and retest the 200. That would be down to about 2,800. That would be a 135, 6% drop from here, 5% drop from here. My hope is that we bounce. One thing that I learned from Ian is always good to have multiple scenarios that you can be ready for. So here's my 3 scenarios. The bullish scenario is this is a bounce and we go on to new highs. Well, that would be wonderful. What I think is more likely is that we drop, bounce, drop, go to reach new lows, and then ultimately the worst thing would be a straight down drop from here as we've been going. I think the most likely is pattern number 2, but I have to be prepared for both 1 and 3 as well. I'm concerned about the market here. This is the S&P 500. If we look at the Dow Jones Industrial Average, not much different to say, sitting right on its 50 with a hammer. If I look at the NASDAQ sitting on its 50 or bounced off the 50, the bottoming tail. If I look at the Russell sideways mover, breaking down here, looking at the dollar, sold off the last couple of days, had a sell signal come in on Friday. It's been a big mover of late. Volatility, and then had a shooting star right here and closed, but still above the 200-day moving average. I think if the market drops, this will go to much higher levels. You can see it spiked back in late 2018 all the way up to 36 there. This is the CBOE volatility index. It's a rapid mover, but by the time most of us amateurs get in, it starts to fall. If we look at gold, with the concern of the market, the tariffs, gold popped on Friday despite a dollar that's been strong. The gold is living at its recent highs, and silver is pulled back to support. Oil, I believe, bounced on Friday, as you could see here, but it's been in a downtrend as well. So these markets do not look healthy. I then go and look at the industry groups, and a couple of things that'll pop out at me. Got 174 industry groups, 2-day force, any kind of momentum. I've got 8. That's a pretty small number. 2-day down, I was surprised to only see 10. So where are all the groups? It finds that if I look at 5-day down, I've got 76 groups. If I look at 5-day up, I've got only 10. So that tells me that the reason why there's only 10 to the downside on the 2-day is that they've been going down more than 2 days and that this market is trending lower. So hard for me to want to be a hero here and be looking for a lot of longs. So let me just show you some of the things that I looked at. I start by going through the top performing groups, and you can see there are some stocks that look good. SunPower had a Bible gap up here. Well, actually had one here. And then the next day, a couple of kahunas. Looks pretty darn good. My only issue with Sun, it's had a big run already, and it's got tepid earnings growth, but looks like maybe turning around. One of the darlings of my friends and I has been Enphase. Couple of Bible gap ups here. I'm right below all-time highs. This one's got some great earnings per share growth coming in. You look at the growth compared to the multiple, stocks usually go higher. I like Enphase here. It's a little bit extended, and that would be the only concern. First Solar had earnings that were a miss on Friday, and you could see that they traded down initially, closed up closer to the high of the day, and actually on Friday was only down 20 cents despite an earnings miss. You could see on Thursday you had a Bible gap up, mobile breakout from a squeeze. There's my indicator fired positive at Kahuna and a pocket pivot down here. A lot of things that you like to see in a stock if you are bullish. So renewable energy looks good. Precious metals, of course, we saw gold has been strong. Here's Ashanti AU. This one actually looks pretty good. It had a pullback to the 50, now breaking out. Of course, it would have been nicer to buy it when it was closer to the 50. Barracks, similar pass. Pembroke Silver, trading near its highs. Petrium Resources, I did like this one. It's got earnings and growth, and it's pulled back to the 17. It looks like it wants to run again. Also like Goldfields because it's pulled back to the 50, had a buy signal come in Friday. These will move in tandem. I just try to find one that looks like it's not overpriced. Large pharma, surprisingly, perhaps it's defensive plays. BMS is not my favorite, pretty significant downtrend, 3.5% dividend. Eli Lilly, similar picture. This one looks better than the others. This is Merck. It's in an uptrend, pullback, and is, I think, ready to run again. Just for full disclosure, I have a substantial position in Merck. J&J, too low in the pattern. AZ's got a very compelling immuno-oncology portfolio, and we can see how it's driving higher here. Alrighty. There's not a whole lot of groups to look at. Restaurants are a typical defensive play. Restaurant Brands International, pullback to the 17. Kahuna, pocket pivot, my indicator firing with a Bible gap up. Looking here, it's at the high jump bar. I probably would pass. It's a little bit expensive. McDonald's, what a great player this has been. You get a chance to buy it on a pullback here. You've got a couple of things, power generation, a defensive play, utilities, tobacco, food and drug stores are defensive. Let's quickly look at investment companies. This here is Bitcoin. It's interesting because this is GBTC. If I remember correctly, they've got pretty high expenses, which was a negative, but it was a way in a relatively cheap fashion to play Bitcoin. Had a nice opportunity in the beginning of the week with a pullback to the 50, but it ran up, and it looks like perhaps it's running out of steam. You will see some investment managers on my interesting stocks of the week. Speaking of stocks of the week, I did find some stocks that I am going to be watching. I don't jump and buy when the market's like this. I like to have a shopping list should the market turn around. And these are some of the things that were on my shopping list. To start with, you have 4 contra ETFs. These are instruments that you could even buy in most IRAs. They go up when the market goes down. We have a bunch of REITs, a lot of REITs. Why do I have a lot of REITs? Because these things are high interest and may be resilient in the setting of a tough market. American Tower, a lot of cell phone towers, they'll benefit from 5G, uptrend, sideways, breakout. All right, it's my favorite pattern. Cold, uptrend, pullback. Nice to get a kahuna or some momentum here, but this is a watch list. Armada Hoffler Properties in an uptrend. Looks like it's trying to break out there. Great earnings per share growth, pays almost a 5% dividend. CubeSmart pays 3.6. Equity Lifestyle pays a small dividend, but what a great lower left, upper right pattern. Lots to like in these REITs. Here's one that's pulled back, waiting for a signal, pays a 6% dividend. What else do we have? I showed you the renewable energy. Marijuana stocks went crazy this week on Afria's earnings beat. Not only, they had the triple header, you beat revenue, you beat earnings, and then you raise guidance. And you could see a big gap up on Friday. This is a stock that's been beaten down, had a bingo. Typically moves like this carry on, so I might be interested in chasing this one a little bit. You can see the list. I really don't want to suggest that you should be going out and buying everything because the market's going higher. I think odds are that the market at best is going to go sideways. I think there is high risk. However, I may be wrong. And so I'm nimble here. I've got things to buy if the markets roll over, and I got things to buy if the markets go up. One of my favorite holdings is C Holdings. And you can see here, it's got my favorite pattern of a nice intermediate tightness, uptrend, sideways move. And what happened on Friday, a PSAR reversal, mobile breakup from a squeeze, my indicator, pocket pivots, and kahunas. So there are some stocks that look good, but I do think there's a lot of danger in this market. Now, I could have picked 50 stocks for potential shorts. What I do is I try and get a list with a number of different industry groups, and then I put them into my trading programs, and I monitor for evidence of breakdowns and breakouts. When I talk about trading programs in TradeStation and in Thinkorswim, in TradeStation, I'll stick them into my radar screen where I incorporate some of Cigar's Q indicators, some of the HGSI indicators that I like. Probably the most important indicator, which is the earnings date. You can see on stocks, it tells me how long, and then a bunch of John Persons indicators. I run these on a big monitor and I look for changes during the day that might drive me to act on one of my positions. So on that note, I'm going to go ahead and say goodbye. I know this was a short one. As I said, I'm on the road. You all have a safe week. Be careful. Look, I could be wrong. We could be rocketing up to, another 1,000 points for all I know. But if we are, I think we're still going to have some challenges before that happens. Be careful, be nimble, and don't lose your nest egg. Good night, everybody.